This interview is for information only and should not be considered as investment advice or a recommendation to buy shares in the company featured. Welcome to this Stock Box interview. Welcome to the Research Talks podcast here from Stockbox with, of course, Alan Green. How are you doing, Alan? And it's a bank holiday weekend coming up.
It's a bank holiday weekend coming up, and we've had 4 seasons in one day. So we're currently speaking, I think, about 10:30 in the morning, and already we've had 4 seasons in one day.
Okay.
We've had beautiful sunshine, hail, and now just rain and squally storms. So I guess typical English weather for this time of year.
Well, yeah, indeed. I was reading this morning on the news that they're expecting the RAC, the Transport Authority, etc., expecting chaos on the roads this weekend. So if you can avoid it, I mean, you've got a motorbike, so you can avoid it.
Well, I can, and I do, and we got out for a ride actually last Sunday morning, which was great, and just span around the countryside and stop off at these little cafes and just grab a cup of tea and a bacon sandwich, and it's great. But hoping to get out this weekend, but weather permitting. You know, I used to ride all weathers, but I'm pretty much a fair weather rider now. But
right,
unless you're on a tour, of course, and if you get caught in the rain, you get caught in the rain. But that's another story altogether.
Yeah, indeed. Okay, well, if you do get out, hopefully you get a chance over the next few days. Nice to get a bit of a break from the screens. But before we do that, we've just got to cover three. We're going to cover Neo Energy Metals, Fulcrum Metals, and the Aquis Exchange PLC as well, which is interesting.
Indeed, it is. Yeah, well, I'll discuss that when I come to it. But that's really, I really do see, and I've spoken to so many Aquis company CEOs. Oh, Aquis is a great market, this, that, the other. Well, if you look back years ago to the old OFX market, then it became Next Exchange, then ISDX. It was ISDX, then Next. No, it was Next Exchange, then ISDX. It's gone through all these different iterations. But since becoming Aquis, it's really evolved into something that's genuinely a player on the global market. And of course, it is the world's first recognized investment exchange in the cloud, which is hugely significant. But I'll talk about Aquis shortly. But yeah, we've got Neo Energy Metals to talk about first of all, Mark. So I'll kick off with that. So Neo came to market last year. Of course, it was a cash shell. Stranger Holdings was the cash shell, and at that stage, it completed an RTO. 51% of Desert Star Trading, which owns a uranium prospect in South Africa's Northern Cape, and it's called the Aquis Uranium Project. A very competent board was assembled. Of course, none other than Jason Brewer, who is chairman of the group. Sean Heathcote, chief executive, 30 years experience, worked for Billiton, Anglo-American, and also worked on numerous African mining projects over the years. Then we have Bongani Razia. He's a non-exec director of South African LPG company. Jacqueline Mushai, and Jacqueline is founder of Gethoni Mushai Investments. She's a non-exec on the company, also director of Mayflower Capital, which is effectively a children's charity. So the company came to market, raised 4.9 million in November last year at 1.25p. Quinton van der Berg, of course, and his company Q Global were cornerstone investors, invested 3.5 million into the asset, into Aquis. And of course, we all know just how important uranium is. It's really emerged once again as a hugely important metal to drive forward the clean energy revolution that we're currently seeing. It's already established there's a very fragile supply chain, and companies are scrambling left, right, and centre. We'll hear from about First Class Metals in a minute, who have similar or projects in Canada where they're doing the same. and of course it provides clean, safe, and reliable energy. But the simple facts are that the development pipeline for uranium needs to double to avoid a lack of supply in 2040 or a supply squeeze. And of course, we're seeing these smaller nuclear reactors now, the sort of pocket-sized reactors that can power towns and counties and so on. This is going to be very much a feature of the future. So uranium is going to be sort of pivotal to that development. So as Neo Energy Metals has evolved, I mean, the share price, sadly at present reflects what we've seen across the sector. The sector woes continue, but every fall provides a new opportunity, I think, for investors looking at this sector to get involved. And certainly, the Hencries project is a long-established project. Has a JORC compliant mineral resource estimate of 4.7 million pounds of uranium. Of course, uranium is always measured in pounds, but it's important to note that the total license area is 742 kilometers, and that mineral resource estimate is derived from less than 10% of the total license area. It's also 30 kilometers, or just 30 kilometers from Blesberg Lithium. Of course, that's the lithium, the lithium mine owned by Marula Mining. Jason Brewer is also very involved with that too. So the logic here was pretty compelling to develop Hencries and build from there. And obviously with Quinton Vandenberg involved as well, that's hugely important. So the company has raised plenty of money to develop the project. We had an operations update last month from the company. They appointed new people to the team. Two people in particular, Lonnie Gallant, 20 years experience. He's appointed exploration manager. And the company also prepared 2,000 surface samples for transport from the studies that have been undertaken at Hencries, and they believe there is scope for a potential 1.1 to 1.3 million pounds additional uranium on top of the existing 4.7 million pounds resource. So that's hugely important because I mean that's something like a 20% hike on the overall mineral resource estimate. And don't forget that's still from less than 10% of the total license area. So also during February, the National Nuclear Regulator awarded a COR 302 license for prospecting rights. That's hugely important. Uranium mining is highly regulated, as it should be. And also during that time, Quinton Vandenberg, cornerstone investor here, was appointed non-exec director to the board in addition to the directors that I've already covered there. The company also built a new core shed on site, which reduce site costs in that it's better located on site to get the processing work done. Again, during February, dual listed on the A2X, which is an independent stock exchange in South Africa. Jason Brewer was appointed chairman this month, exec chairman this month as well, and also to support the share price further, Quinton Vandenberg bought a further 7 million shares at 0.75p. So that boosts his holding. But again, it's got the Hencries project. So often with companies owning single assets like this, you're waiting for news to happen. And of course, what we're waiting for now are the results back from those samples that were taken. So the additional hike in the mineral resource estimate can be confirmed, and then of course that will add additional value to the current market valuation. But either way, uranium is going to be increasingly important, and at some stage, the valuation gap currently on the share price will catch up, I believe, with the lack of supply in the uranium market at present.
The uranium price doing extremely well, isn't it, Alan? I mean, really. I think we talked about it last time, didn't we? Fulcrum Energy Metals.
Yes, indeed. Yeah.
And of course, that special feature I did with the VP of Exploration, Dr. Rebecca Hunter. We talked really about uranium cycles and what's driving it. And it really does seem like we're well on the way to the third recorded bull market in the space. And yeah, you've only got to look at what governments are doing around the world. The European Union Commission certifying uranium as green, for the first time, which is great. I think it's got a great future, bright future ahead of it. So,
Yeah, yeah.
and there's not many plays,
Not
for
too bright.
uranium. You don't get there's not many opportunities to get exposure to uranium, particularly on the London markets. I mean, you've got Power Metals got something. We're going to talk about Fulcrum in a moment. They obviously got a uranium side to their business, but it's not the core. But yeah, I think it's going to be a real hot commodity to watch that one and to have exposure to. And there's not many choices, which I suppose is a good thing in a sense.
Yeah, and I think it's rare to get there are only a few pure play uranium assets I think listed on the London market. To get exposure to the metal, it's a proxy for the metal, obviously. So or should I say it should be a proxy to the metal, but the share price simply isn't responding to the underlying commodity at the moment. But I'm sure if we can see that MRE increase
Mm,
and what Jason and his team are very good at doing is fast tracking projects and getting them working, getting them
mm,
into production. And all the boxes are being ticked in that regard. The two new hires during February. One of the ladies, Avril, is she's she has experience in managing sites that produce nuclear materials. So that's going to be very important. So the team and the infrastructure is being built to mine and to supply large amounts of uranium. And what is exciting is if they undertake studies further afield across the license area, then they may well find more, and of course that would add to the value once again.
yeah, indeed, indeed, and it's nice to see Jason sort of taking that corporate role. Very clear on that. I interviewed him only this week. It's certainly a corporate role he's got there. Sean Heathcote's going to be focusing on the CEO role, effectively the technical, the making sure that the value is built in the company through exploration, etc. The role of a CEO, but Jason's looking after the sort of the business side of it, the corporate, and of course the
Yeah.
investor relations, which is obviously very good at and very in tune with. So yeah, I was at the IPO in London. Obviously, I must admit a little bit disappointed that nothing's happened sort of since then. That was in November, but it seems like now things are going to start motoring on a bit more. So it's good. I'm looking forward to watching how they develop this year. But thank you, Alan, for that. So Fulcrum then, Fulcrum Metals again. It's got a bit of common theme, a bit of uranium. And also, Mr. Brewer has joined as a strategic advisor to Fulcrum.
He has indeed, and yeah, of course. So Fulcrum came to market, in fact, a year ago, quarter 1 last year. So they've been on the market for that time, and placing at 17.5p when it came to market. Currently trading 15.5p. So actually, the company's performed pretty well, and I think what is surprising is, well, firstly, it has performed relatively well, compared to sector or the sector peer group, but also it's added a number of really valuable additional projects to the asset portfolio, and that's really important. So of course with Fulcrum we have Ryan Mee and Aidan O'Hara, both co-founders of the company. Ryan Mee's chief executive, Aidan's in charge of corporate development, and indeed at your Canada event last year, Mark, of course, I had a good chat with Aidan and the team there. But really, really excited to see the potential developing from the assets they have. And of course, these assets include in Ontario the former Panther Metals Big Bear project, golden base metals, Jackfish, Winston Lake, and of course, Winston Lake was the actual territory was extended through the acquisition of the Carib Creek Easter project, which has extended the interest there too. In addition, of course, we mentioned uranium just now, Mark. In Saskatchewan, we have a range of assets there. In particular, the Charlotte Needy Lake project, the Fontaine Lake project, and we've had a couple of additions there too. And the company have been out on site there during January. They collected 62 rock samples, which 48 of them were up to 5,680 parts per million uranium, and 14 of them were up to 7,130 parts per million. So and the company noted extensive radioactivity and mineralization. And of course, this has been this really, really important. It was a really important sort of part of the exploration um, evolution for Forum Metals, because shortly after that, the company announced that it entered into um, a letter of intent and a royalty agreement with Global Energy Metals Corporation, GEMC. And for this, Forum Metals receives 5 million shares in GMC. It's a Canada-listed company, and will also get a further 1 million in cash and shares if GMC exercises its option to develop the assets at Saskatchewan over a 2-year period. And Ryan Mee said at the time, what this does, it really demonstrates the underlying value in the Forum Metals uranium portfolio. And this we often see this. Companies buying assets. There's an upswing in the commodity price, or upswing in interest in the underlying commodity, and companies seeking to add that to their portfolio will work with a company that's already undertaken recent work and established some good numbers in order to fast track and develop it. It's certainly quicker and better than finding something from scratch and developing something from scratch. So that was a significant move for the team there. So there's the Saskatchewan and the uranium assets, very important development there. But also during since coming to market, the company's made a number of acquisitions. So it acquired the Tully Gold Project from 911 Gold Corp in Ontario August last year, paid $800,000 and a 1.5% net smelter royalty. There's an established 107,000 ounces of gold there, 76,000 ounces at 6.5 grams per ton, and 31,000 ounces of 5.17 grams per ton. And also in the acquisition, uh, Ryan and the entire board participated for a total of 195,000 in the fundraise. And it's always good to see the CEO have skin in the game, but I think when the entire board participate, it gives you an indication of just how important that development is. So of course, with as the year progressed, the company added a further project to its asset portfolio. It acquired the Tech Hughes tailing projects. This is an asset that historically has produced 3.7 million ounces of gold. It has an option to acquire 100%, and it's also working with a company called Extract Process Solutions to license its gold leaching technology. And what's so significant about this is that this has the potential to be Fulcrum Metals' first cash generative project. So the company then evolves from mining explorer into mining producer, and that of course brings an entirely different set of metrics into the mix. So Tech Hughes, we had an update from Ryan and the team in January. A sampling program is underway there. Estimated 138,400 ounces of contained gold at the asset. Now the test work was undertaken right at the end of January, and it is then supplied to the lab. There's a four-phase agreement with Extract to and the first step in that agreement will secure or is the first step towards licensing that technology with the group. So we're going to get news back on those samples really in the next few weeks. So that could really provide a really decent sort of uplift for Fulcrum Metals at that point. So really important developments there. I mentioned, of course, Fontaine Lake and the Saskatchewan assets, and of course the agreement with Global Energy Metals Corporation (GMC), and the uranium footprint across Saskatchewan with the additions the company made, Snowbird and South Pendleton, has been increased by 221%. So it's a vast area, and I'm sure if the initial agreement with GMC proves fruitful, then GMC could become a partner to work with Fulcrum Metals on those other assets. There are also been developments at the company's core projects, or the ones it came to market with. So we had interims from the company. Some test work was done at the Big Bear project. They established some pretty impressive gold grades from sampling: 45 grams per ton gold, 37 grams per ton gold, and 33.6 grams per ton gold from rock chip samples. And they've established at Big Bear a 3 kilometer mineralized corridor, identified 4 drill targets, and there are also a further 5 targets that are currently under consideration for drilling as well. So, really strong progress from the group. But I think investors are looking for that inflection point to drive the share price. It's going to be these results, I think, the sampling results from the Tech Hughes sampling program, because then, depending on how good those are, we're going to see the company, I think, fast track towards production, and that's going to be a pivotal moment. It's a pivotal moment for any company, but I think for a little company like Fulcrum Metals, which currently has a market cap of just 7.6 million, that's going to be a huge moment, which I think will transform the company.
Oh, I think so as well. I think that that extract technology element of the business is the one to really keep an eye on. I mean, I interviewed, I think it was the co-founder, perhaps CEO of Extract, and the technology sounds absolutely groundbreaking. And they're working with some serious majors. We couldn't name them on live, so to speak, but it's the big names in the mining industry to reprocess these tailings dumps. And I think that's the way Ryan wants to take the company, is down this route, this cutting edge technology, and reprocessing tailings dumps to get the gold out that's in there and get into cash flow. So he certainly seems very set on that and very bullish on that. So I think that's the element to watch. But that's what's kind of piqued my interest. Anything that's sort of new, innovative, cutting edge. I mean, the way they were talking was it's going to transform the sort of value of sort of tailings projects. And you think tailings are kind of like, it's old stuff. Yeah, there's stuff in there, but can you get it out? Can you not get it out? So, we're going to hear some results fairly soon, I think, on how that initial testing's going, and that's going to be a real pivotal moment for the company, I think.
Oh, it is, yeah, absolutely. And what I like is, so we've spoken about a number of IPOs over the past year, of course, Fulcrum Metals, Golden Metal Resources, and some companies come to market and they set their stall out, but then they very rapidly add new dimensions to the offering. And when Fulcrum Metals came to market, it was just valued on the old Panther stuff and a few other bits and pieces. But I mean, Ryan and Aidan and the team, they've really transformed this and put it onto a completely different footing. And that's impressive. And they've done that against the backdrop of unbelievably difficult markets. We're all sort of in the middle of this and trying to sort of see a way through. But if you look at how the Fulcrum Metals share price has held up during that time, I think now you're below IPO price. The board participated in that acquisition. Don't forget that I mentioned just now, and with Tech Hughes set to potentially come on stream, and the agreement with Extract could be set to transform tailing projects. I think we've got a real store of value in the company, and it could explode into life very soon. Actually, I mean, I'm looking at the share price now. So year high of 17.7p, just over the IPO price. Year low 14.4. So really, the movement's been marginal considering the sector it's in and considering the pressures the sector's come under. And we're just seeing that little blip up. So we've had that floor around 15.25, now 15.5p. I think we're straight back to that year high once this gets confirmed, and possibly well beyond that. Because there's a whole different dimension there. Because I'm sure if that technology is licensed, then it'll be applied to other tailings projects around the world.
Yeah, indeed. And as I say, I think that's exactly what Ryan intends to do. Really, what's the current market cap, Alan?
Currently, I'm looking at 7.62 million.
Okay.
So
okay.
yeah, which is peanuts really for what the technology they're working with.
Well, thank you for that. So let's finish off by talking about the Aquis exchange, but not the exchange. So it's more the PLC. I guess you can buy shares in the exchange.
You can indeed. And Aquis it's gone through so many iterations. I think I said at the start that over the years. So initially, so those that remember back to the noughties, it was the OFX market, which was a match bargain facility, little more than. It then evolved into the next exchange. I think it's no. It then evolved into plus markets. That was it. It became plus markets. Then it became ISDX. Then the next exchange.
Hmm.
I may have got the order wrong, so I'm sure somebody will put me right if I have. And then it became Aquis, and of course, when it became Aquis, it really started to come of age as a technology-driven exchange services group, bringing sort of innovation, transparency, and competition to the exchange industry. And we're all aware of the cost of listing on AIM and the cost of listing on even the main market, which is considerably less than AIM. But I think we can all look at those exchanges and say, well, they've not really delivered value. They're not really providing a good market for the constituent companies at present. But I think that same accusation can be leveled at Aquis. But I think what it's done, it's constantly innovated and developed. So there's three elements to it. There's the Aquis Exchange, which is an operator of multilateral trading facilities. It's got a lit order book, no aggressive or non-client proprietary trading, which is equals lower toxicity and risk. And of course, as you say, Mark, you can't go short of Aquis companies. Then you've got AQSE, the stock market that provides primary and secondary markets for trading. And also, as I say, the company or the exchange made history as the first recognized or RIE investment exchange actually on the cloud, which is a huge moment. And this is the way markets are going. We've spoken about tokenization and basically automation across the board. This is what the group have done. And then the third corner to that triumvirate, if you like, is Aquis Technologies, and this is the company that provides the software and technologies, cutting edge market surveillance, and market gateways for banks, brokers, and investment companies. And the company isn't delivering spectacular growth, but what it is delivering is steady growth. It's a cash cow, and we've seen, if you look at the share price and the performance over the past year, shares have traded as low as just over £3. That was back in October last year, and then came back up and currently trading at £3 or 384 pence. Year high of 420p. That was last year, and of course, with the recent results, it jumped right back up to the current level. And I think there's every expectation that we'll see the stock in the company push back above £4. So for companies listing on the exchange, obviously the costs and the fees are far lower for companies listing on Aquis rather than AIM or others. But there were two primary structures on the market. The access structure obviously provides companies with access to the market. So you're listed on the Aquis exchange. You can't necessarily trade that share online, although I think in some instances the shares that have been active have contacted the RSPs and retail service providers, and they have facilitated online trading for companies listed on Aquis. And then you have companies such as Marula Mining that are in the Apex category, and these are companies that have delivered strong growth, strong liquidity, and of course you can trade Marula online very easily. It's a very easy stock to trade. But just recently, it was early in March, the company launched a third element to that, ARAM, or Aquis Real Asset Market. It's a third segment alongside Access and Apex. And what this does, it offers trading facilities for real estate, infrastructure, land, forestry, and debt financing. So we're going to hear more about that, no doubt, as the asset develops. But the company is very proactive. It's looking at technology and developments, and in August last year, for instance, it took a minority stake along with Deutsche Bank in a US block trading startup called Optimex. It then appointed Investec as Nomad to broaden broaden its investment appeal. It was also recently selected by the Colombian government to advance government bond trading market using Aquis technologies. Remember the three arms to Aquis, so that's Aquis Technologies have provided software to the Colombian government. And then, as I mentioned, what really triggered the jump in the shares, those full year results, 30% hike in revenue to 22.7 million, pre-tax profits up 15% to 5.2 million, cash had grown by 4% to just under 15 million. And Alistair Haynes, the CEO, said, we've seen growth in all divisions of the company despite these unbelievably challenging markets. And I think that's the telling sign when you can evolve, when you can innovate, and generate new revenues into the company during a time. And during the period, Aquis has listed, and so far in this year, Aquis has listed more companies than AIM or any other exchange in London, and that's really telling you where things are going. It really is down to AIM and London main market to get its act together, because we are seriously losing ground to European exchanges, US exchanges, and so on. You look at companies listing on NASDAQ now. I've been hearing about some of the fees charged by advisors. They're many hundreds of times higher in some instances than fees charged over here. So, post Brexit, I think we've been asleep at the wheel. And the one good thing is that Aquis certainly haven't been asleep at the wheel, and they're building a business that is growing. The company doesn't yet pay a dividend, but I think if you're going to invest in the future of the stock exchange industry in the UK, this is the place to be.
Really? You think it's going to be challenges to the LSE?
Well, I think in time, historically, I mean, I'm going back to the noughties, and everyone wanted to list on AIM because that was the market, even though the listing costs were high. The brokers and investors would always raise money to get listed on the exchange, but the AIM has done nothing. The companies listed on AIM are diminishing by the day. The London main market hasn't really done much to rejuvenate its appeal as an investment destination, but Aquis has really seized the opportunity, and I think it's for companies coming to market now, it's really the only place to start. If you're coming to market in difficult times, you can get an Aquis listing, and I think that was going back to Jason Brogan. That was the plan with Marula, to get a listing on the Aquis. And Aquis for Marula has worked very well because you can trade online just as you can trade the shares online with an AIM company or with a London main market company. So there's no difference. It's the choice of venue, and in that regard, Aquis is very much cheaper than the main market. So although CEOs still have aspirations to move on to the main markets at a later stage, I think Aquis volumes will grow steadily. They will build and build, and I think eventually, 5-10 years time, there'll be no question as to where you go if you list in London.
I think what you say earlier as well about you cannot short the AIM the Aquis market. That's huge, because we know how much shorting goes on, particularly in some of the AIM stocks, and then it's closed out through placings, etc. Stuff that you would consider borderline, market abuse. But it happens quite a lot. So the fact you cannot do that on Aquis is really good, and that's a great way for certainly companies starting out on their journey to start, really. And like you say, Marula is a very good example of that.
Well, it is, and I mentioned yesterday. I put a tweet up yesterday on obviously BidStack went into administration, and then hey presto, James Draper, the CEO, or the former CEO, decides to buy it out of administration, and he's overjoyed, and he's eulogizing. It's a fantastic opportunity. Well, yes, mate, but during the time you've been at the wheel, you've raised money, you've not communicated with the markets and shareholders, and you have blatantly abused your position. And that to me is where AIM has been caught with its pants down. It just simply hasn't acted and pull this guy into line. And I know there are other companies out there that do that, but there's a Bidstack had such a strong retail following. I've been contacted since I put their message up by, well, I think getting over 70 people. So it's really an issue that I think has epitomized some of the problems that AIM currently faces. So this is something I think that needs to be addressed, and soon. Meanwhile, Aquis Exchange just gets on with the job of building, and I think they will be the destination of choice in a few years.
Okay. Well, thank you, Alan, very much for your time again, of course, covering Neo Energy Metals, Fulcrum Metals, and the Aquis Exchange. And do have a very pleasant bank holiday Easter weekend. Happy Easter. And we'll speak next week.
Thank you, Mark. And I'd like to wish everyone listening a peaceful and happy Easter.
If you enjoyed this interview, then give us a thumbs up, a like, or a retweet. Subscribe to us on YouTube or follow us on Twitter, and hit that notification bell to be the first to know when we release new content. There's loads of great content on our website too, across all our programs at stopboxmedia.com. Thank you for watching.